This is the second lesson for today, and this one's about placing your stop loss and take profit. And also, we're going to talk a little bit about money management and a little bit of psychological, how this market plays on your mind when you trade. Okay, so anyway, let's get into it. I'm going to remove this little screen here. Okay, here we go. So basically, like I was saying earlier, I myself, I like to use basic, money management. So for every, if you don't want to blow up your account, which you don't want to do, okay, so, you just want to use basically, for every $1,000 you have, depending on what you want to risk. I myself, I like to trade one mini. Okay, so that kind of answers, the fact of, well, how many lots do I trade for how much money I have? Okay, well, that answers that question, but that doesn't seriously answer how much money you can lose. It all depends on your stop loss of how much money you can lose or win, okay, and your take profit. That's the key to this. So anyway, I'm going to tell you a little bit more about that in a few minutes, but first I'm just going to tell you exactly where I place the stop loss. So how I like to place stops is at the swing high or swing low, depending if you're, buying or selling. And then I use a simple thing, which is if my stop is 100 pips, then I'm looking for a 100 pip target. So then you're getting a 1-to-1 win-loss ratio. Okay. If, it's 200 pip stop, well, then you need to go for 200 pips, take profit, and that's it. Basically using the 3-candle pullback, the trade line entry as we use it, okay? The Fibonacci tool, okay, is a little different because you're basically using the targets on the tool, okay? So, it can be a little bit different, okay? So, as you can see here, okay, you would have got in short here. Oh no, I drew that in the wrong place. Hold on, let me blow that up here. There we go. So in this particular situation, you would have got short here. Your stop would have been up here or up here. So it's either like 75 pips to 100 pips. So you're going, your target was, it wasn't a 1-to-1. Okay, if you're going to target one, it was only basically a 50% win to the first target, as opposed to the amount that you're using for your stop. So it's all up to you. You when using the Fibonacci tool, okay, you already can see what your target's going to be. So you can already, foresee what you're going to be risking and what you're going to be, putting on the table. But when you're doing the 3-candle pullback, okay, other than using support and resistance, okay, for your target, or a 1-to-1 win-loss ratio. So if you got short here, and your stop was 75 pips, well, see, to the nearest support level, it was only 62 pips. So then again, you did not have your 1-to-1 win-loss ratio, okay? So, they say, there's a saying where they say, if you can win 33% of your trades and lose 76% of your trades, it depends on how how many times your take profit is going to be to your stop. If your take profit is 3 times the amount of your stop, you can still be profitable. Okay, so you really it's all about math and how you want to do that. But I use a simple thing. Like I like to go for 1-to-1. So if I have a 100 pip stop, I'm going to go for a 100 pip target, and it's just as simple as that. So that's about all I think I need to say about the stop loss and where you're going to put your take profit. Um, but then the money management part of it comes in. Okay, so you got to know, like, if you're going to risk, if you don't want to risk, say, no more than 5% of your account. So let's say you have a $10,000 account. So if your stop loss is 100 pips and your take profit is 100 pips, okay, and you don't want to risk more than 10%, which would be $1,000. Okay, so you're going to be risking $1,000 on the trade, or no, hold on, 5%. No, that's $500. Sorry, I got that wrong. So you got to figure out if your stop is 100 pips, you need to figure out exactly, how many minis you can trade for it to be to hit. If it hits your stop, you'll only lose $500. So in this particular case, I believe it would be 5 minis. Okay, so if you have a $10,000 account and you have a 100 pip stop and you can only risk 500, then the most you can trade on that trade is 5 minis. Okay, if you win, then you're going to win $500. Okay, and that's basically it. So many people over the years email me and ask me about money management, and I say it's a real simple thing, but so many people want to complicate it, and so many people are mixed up between, well, how many lots do I trade? That's not, for how much money I have in my account. That is not really managing your money, okay? It is to a sense, but it depends exactly how big is your stop and how many lots are you trading. That's your key factor to finding your risk to your reward. So anyway, that's how I do it. Even the other 3 trading systems that I put out, I always tell people, if you're going to get into a trade and you're risking 100 pips and you're going for 100 pips, you would simply, if you see 50 or 70% of the profit, it hits 70% of your profit target. Okay, you might want to move your stop to break even, or I myself don't like moving it to break even. I like moving it to maybe plus 5 pips or plus 10 pips. I don't want to do this trade for nothing. You spend all the time in the world, planning the trade, but most people don't. They seem to get spooked, and they don't continue trading the plan. They plan it out at first. They put on the trade. They put on the stop. They put on the take profit. But if it goes against them, they get spooked and they get out. So anyway, what I was trying to say is you would move your stop to like maybe plus 5 pips once you see 50% of your target. There's also people who will put lines on the chart instead of a take profit. Okay, so if it hits 50%, they'll move their stop to break even, and if it still looks powerful in their favor, they'll just walk away and let the thing run. There's sometimes if you catch the bottom of a move, it can run 200, 300, 400, 1,000. There's some people who can get 1,000, off of a 1 hour time frame if you just happen to get in at just the right time and it doesn't come back and it doesn't hit your stop, that you moved and you locked in some profit. There's a lot of people who trade like that, but a lot of times when you trade like that, price comes back, it hits your, it hits your 5 pips take profit, and whatever you had before, you gave it back to the market. Because there's an old saying, if you don't take it, the market will. So, there's 2 different ways you can go about this. So, anyway, that's pretty much it on that. Other than what I'm going to talk about, some psychological parts of trading. So, I want to see if there's any questions on that. Okay, do we have any questions? Let's see here. When we finish the course, will we be primarily divergence trading and secondarily trend and Fibbo trading? Well, Victor, it's up to you, okay, what you want to do. These are 2 separate courses that I'm teaching here, okay? I'm basically done now teaching the Forex Trendmaster entries, okay? Those are those 2 entries that we covered today, along with the natural market flow analysis, okay? When I teach you divergence starting next week, okay, I'm first going to start with counter trend, easy to see, divergence, and then the following week, I believe I'll be teaching you double top and double bottom divergence, as well as hard to see divergence, okay? So that's how we do it. So then we have one question by Gerald here. Would you ever consider taking a swing low? Oh, hold on, I've read that wrong. Would you ever consider taking profit at, say, 50% and then re-entering the trade? No, I don't re-enter trades. I wait for the next setup. You can take profit at 50%, if you feel that the market isn't going to continue in your favor, okay? You can do that, or you can, do like I say, you can move your stop to either break even or lock in a couple pips, whatever you want to do. Okay, so Howard has another question, and is, can you draw the Fibbo from 129.90 swing low? Is that a valid point to draw from 29.90? Well, we're not talking about that, drawing Fibonacci lines now, Howard. But anyway, we're talking about money management. But anyway, I don't know what you're talking about. What price? I can't even see that price right now. Sorry, but I can go look. 29.90. Where's 29.90? 29. Oh. Yeah, okay, I see what you're saying. Yes, that would be a lower high where you could draw it from. Okay, you could start drawing it from there now. But it didn't really retrace very much. That's why we're taking it from this swing low right here to this swing high, okay? Like I told you, if it doesn't go any farther, it's got, for it to be valid, it's got to go past the 23.6. It's got to at least hit the 38.2. Okay, so that answers that question. Is there any other questions on the money management of how many lots you need to trade for how much you have in your account, or where you should put your stop and so forth? Do we have any other questions on that? Just waiting to see here if we have any other questions. Doesn't look like it. So, it's just basic stuff, where to put your stop and your take profit. This is basically at the swing high or swing low. You put your stop and you just calculate how many pips that is. And then you basically, figure out your money management of how much you want to risk per trade. Okay, so there's no questions on that. So now I'll just talk a little bit about psychological part of trading. This is all coming from my head, ladies and gentlemen. I'm not looking at any I'm not reading this from anywhere or anything. That's just the way I do things. It all comes from the top of my head. That's how embedded trading is in my mind and in my life. It's a big part of my life. I've been doing it for 11 years, and I do it 5 days a week. Well, basically, I trade about 3 days a week, but anyway, it's just on and on and on. So anyway, I just want to say that there's a lot of traders who get into trading for the simple reason they think they're going to get rich, and they think it's easy, okay? And they soon find out that it's not so easy. And believe it or not, there's been an old saying that even the most well-educated people that come into these markets and try and trade them, they think that just because they were smart enough to get a doctor's degree or a lawyer's degree, that they're going to have an advantage over, say a person who comes from a factory, okay, or something like that. Like, I'll tell you quickly here right now that in my 20s, okay, I was a bricklayer by trade, and I did that for 6 years. And then after that, I basically worked in factories. So I was like a machine operator and stuff. And now I don't do that, and I basically trade, okay, for a living. But it's funny how these people who went to school and went to university and they're the ones that they're more so apt to lose than everyday people who just comes from wherever. Not that you're any smarter or dumber than they are, okay, just because they went to university, okay. But a lot of those people seem to strike out really quick, and because they have so much money they've made as a practitioner, doctors and lawyers and stuff, they come into the market with big money. And the big, huge funds just scoop up all their money, okay? But, what I'm trying to say is the market, it's not as complicated as people think, okay? There's natural market flow to it. Like this part I told you guys about, the natural market flow, okay? If you can follow that, that's going to erase 50% of your risk, because if you're looking to buy, okay, you got to have it in an uptrend, doing the higher highs and higher lows. If you're looking to sell, it's got to be doing the lower lows and the lower highs, lower lows, lower highs. That's going to save you 50% of losing, because you already know that you're not going to be buying or selling in the market. So anyway, back to the psychological part of it is that, if you don't, plan the trade, okay, and then trade the plan, for sure you're going to lose over and over and over again. And I know this because I've done it myself. You gotta stick to your guns. You gotta go, okay, the hardest part is finding that trade, okay? And once you find that trade, you put it on, and you put your stop loss on, and you go, okay, if I'm not going to put a take profit, I'm going to put a line somewhere. If it hits that, okay, I need to reduce my risk. So I need to reduce my risk by either 50%, or at least move it to plus 2 pips or something, okay? So once you do that, all your fear and greed is gone, because you're in a free trade, okay? Believe it or not, more people, how do I put this into words? People, this is going to be hard to believe, okay, but people get more, how would you say, excitement and joy and pleasure, even though they might not realize this, when they lose money than when they win money. Okay? When you win money in the market, you make money in the market, and you do it consistently for a while, it becomes boring. In your mind, you're saying to yourself, oh, I've licked this thing. I've mastered this thing. But in reality, when you think you've mastered it, all these other weird things will happen in the market, and the market doesn't care who you are or who your name is, and it'll just whip your ass again and put you, whatever you made, you're going to lose it and lose more of your own money. Okay, so you gotta always be on guard to what the market is doing, and like I'm saying, the people who lose money and then they fight back and they get that money back and they make a profit, all that adrenaline that's being created in your body, okay, from doing that and in your mind is more exciting, okay, than just actually winning all the time. So you got to really train your mind to not be excited whether you win or lose. You got to understand that the market is what it is, and you got to take it for what it is. But if you follow a plan, okay, and you keep following, you plan that trade and trade that plan. If you can try and do that over and over and over again, and it doesn't even have to be this system that you're using, okay? There's a lot of systems out there that actually work, but the problem is it's the people who trade them that can't follow the rules of that plan, of that trading plan, and if they happen to start using that trade, that system or whatever, at a time where it just hit a couple bad trades, they'll go, oh, that doesn't work, and they'll just forget about that, and they'll move on to the next thing, system hopping. Just like I said on my website, there's a lot of people, you'll buy one system one week, and it doesn't work for them, and the next week they'll refund it and they'll buy the next new thing that comes out. You really gotta try and stop doing that and just concentrate on something that that works. And that's basically it. It's just how would you say? It's all a play on your mind, and I don't know if any of you realize this, but at times when you try out systems, they don't seem to work, a lot of them. And then whenever the market does a huge move one way or the other, have you ever noticed that if you ever go and look at past systems that you use, that they all seem to have gave a signal when that happened, and it all seemed to work? That's what I've noticed anyway, and it's really crazy. It's really crazy. So anyway, the most important part of money management is once you find that trade, you plan the trade, then you trade that plan, and that's what will keep you in the game longer and above the rest. So basically, that's about all I think I need to say, and other things that, there's other things in your life too that might affect your trading. If you just broke up with your girlfriend or your husband or, whatever the case may be, you could have a job at work and your supervisor or your boss is on your case, and, you got to try and block that out and, and do what you can and do your best when you're looking at the charts. So all these things can, affect, your mind and your trading and so forth. So anyway, my screen went black here for a second. I'm not moving my mouse here. So anyway, that's pretty much it. Is there any questions on that? Let's go back here now. Let's see. The same entries also work trading futures. Yes, they do, Gerald. If you go look at the Euro 6E, they call it the 6E in futures. Okay, you'll see the exact same identical charts, except there's no pipettes in futures. It's just tick by tick by tick. So the charts will pretty much look exactly the same. Okay, another question from Gerald. How do you deal with the fear of pulling the trigger after you've had a few losing trades in a row? Well, you just got to get past it and do it. I don't know. Sometimes it's hard. Sometimes you might want to take a break, from trading and step away from it for a while and then come back. But I assure you, what I've taught you guys here, these basic things, you're not using any dots or squiggly lines or anything on the chart. Okay, no arrows here. What I've taught you here, I know it works. Okay, and I've showed you the trades here that did work for the most part. Let's see, what's another question? Yeah, that's right. You never know what's going to happen next, Victor. That's for sure. Oh, this one's a little deep. From Bob, he says, if you can dream and not make dreams your master, if you can think and not make your thoughts aim, if you can meet with triumph and disaster and treat those two imposters just the same. Oh, that's from somebody's quoted from somebody. Okay. So then we have a question from Philip. So how long should you stick to a strategy before you decide it is not worth it and look elsewhere? Well, if you lose like 50% of your account, that would probably be a good start. But I assure you, what I'm going to teach you guys, there's this part, and what I'm going to teach you guys about the divergence is so powerful. And the trend lines, just knowing how to draw trend lines and where to get in on those is powerful as well. So stick with this. I'm telling you, these methods really do work. It's the best of the best of what I've seen in all my 11 years of trading. Tom says, which system do I find the best? It's actually the divergence. I really do. I strongly trade the divergence mostly. And Victor says that equanimity is the way to go. Okay. Anyway, I don't like using $100 words. I like using the 5-cent ones. Anyway, and then Craig says, I went through all the emotion stuff you described, and it's totally true. It took years to get on top of it. It's like growing up as a trader. Yes, indeed. To become a really good, successful trader is knowing and learning about stuff about yourself that you never knew before. Okay, and you really gotta dig deep within yourself to find out. Am I the kind of person that can't stick to, say, a diet plan, or you can't stick to certain other things in your life, like exercising every day and stuff like that. So this is how you kind of get a grip on your trading activities to stick to the plan and trade plan the trade and trade the plan. Is if you can test yourself with other things in life, things that really are a big influence in your life, whether you like to eat a lot or drink a lot of beer or do exercise or not do exercise. Try conquering some of those things in your life first. Then if you can conquer them, then you can get really strictly self-disciplined to do the trading as well. Okay, so let's get back to this here now. These questions, lots of questions. Howard says, are you showing multiple systems? I've showed so far, Howard, 2 entries, okay, which is with the trend, okay. One is using a trade line. The other one is using the Fibonacci tool. Next week, I'll be showing you 3 other entry methods, okay, using divergence and trend lines, okay. So there's 5 methods total. Okay, so you can choose whichever one you want to use, but I'm telling you, all 5 of them work. Okay, if they didn't work, I wouldn't be teaching it to you. Like I said on my website, this is a no fluff, no guff course. Okay, I'm not gonna write 300-page manuals. I'm not gonna tell you about all this stuff that doesn't make any sense to anybody. As as far as all of you can see so far, that what I've taught you here, it's very simple, it's very basic, it's very straight to the point, and I didn't go off any side roads anywhere teaching you the wrong stuff. Okay. Okay. So then another question here is okay, Victor. Thanks. Anyway, Paresh says, after learning divergence, do you think we will be able to decide where divergence has ended and reversal has begun? Oh, yes. Oh, yes, indeed. That's another thing, okay, is that you can find, you'll have places where you'll be looking at these 2 entries and you'll be going, well, I don't want to do it because there's divergence there. Okay, so it'll stop you from making a bad trade decision. Okay, do you still have next topic to lecture aside from question and answer right now? No, Jesse, there's no other. I've basically said everything now. Kanota, yes, I basically trade with this 2 strategies. I trade the 4-hour and the daily. And Bob, the preferred time frame is the 4-hour. Okay. And yeah, it's the 4-hour. But when I trade divergence, okay, I like to day trade the 15-minute and trade the hourly and 4-hour as well. Okay. So anyway, that's pretty much it, I guess, for today, guys. I think we pretty much wrapped it up. Other than I could quickly show you some divergence trade setups that happened this week. Do you want to look at that quickly to see what you're in store for next week? Does anybody want to? Yes, please. Okay, I'll show you some of that. And then we'll end this. So basically, the money management is now basically done. So I'm going to stop recording the video now. I mean, the money management part of it. Okay, one sec.